Hello and welcome back and Happy New Year. As we step into January 2026, millions of Americans are checking their bank accounts, opening their mail, and asking the same question: is my Social Security payment correct? And if you're feeling unsure, confused, or even a little anxious, you're not alone. January is always one of the most important months for Social Security recipients. That's because January is when changes stop being estimates and start becoming real. This is when cost of living increases finally show up in checks, when Medicare deductions adjust, and when calendar shifts can make payments arrive earlier or later than expected. Right now, more than 70 million Americans depend on Social Security or SSI for at least part of their monthly income. For many people, it's not just helpful money, it's essential. Rent, groceries, utilities, prescriptions, and medical care all depend on those deposits arriving on time and in the right amount. So in this video, we're going to slow things down and walk through January 2026 step by step. We'll talk about which Social Security and SSI payments have already been sent, which payments are still coming later this month, why some people received deposits earlier than expected, what changes officially started in January 2026, and what all of this really means for your monthly budget going forward. And before we dive in, let me ask you a quick question. As this new year begins, what worries you more financially right now? Rising prices, healthcare costs, or uncertainty about the future? You can share that in the comments if you'd like. Many people read those comments, and you're not alone in how you're feeling. Now, let's start with payment timing, because that's where most of the confusion happens every January. January 2026 payment schedule. What's already been paid first? Let's talk about supplemental security income, also known as SSI. If you receive SSI, your January 2026 payment did not arrive in January. It arrived early, on Wednesday, December 31st, 2025. That wasn't a mistake, it wasn't extra money, and it wasn't a bonus payment. This happens because January 1st is a federal holiday, and Social Security does not send payments on holidays. When that happens, SSI payments are moved to the last business day before the first of the month. So that deposit you saw at the very end of December was simply your January SSI payment paid early because of the calendar. This causes confusion every single year, so it's worth repeating. That payment covered January. It did not mean you were paid twice. Now, if you receive both Social Security and SSI, or if you started receiving Social Security before May of 1997, your January Social Security payment was scheduled for early January. Normally, this group receives their payment on the 3rd of each month, but in January 2026, the 3rd fell on a weekend. When that happens, Social Security sends the payment on the previous business day. So for this group, the January Social Security payment was sent on Friday, January 2nd, 2026. For most people in this category, that money has already arrived in their bank account or direct express card. Again, this was not extra money, it was simply your regularly scheduled January payment sent slightly early due to the calendar. If you do not receive SSI and you did not start receiving Social Security before May of 1997, your payment schedule is based on your birthday. Here's how the rest of January 2026 breaks down. If your birthday falls between the 1st and the 10th, your payment is scheduled for Wednesday, January 14th. If your birthday falls between the 11th and the 20th, your payment is scheduled for Wednesday, January 21st. If your birthday falls between the 21st and the 31st, your payment is scheduled for Wednesday, January 28th. If your payment date hasn't arrived yet, that doesn't mean anything is wrong. It simply means your scheduled Wednesday hasn't come up yet. One date that's confusing many people this month is January 7th. It looks like it should be a payment date because it's the first Wednesday of the month, but it is not on the Social Security payment schedule for January 2026. So if you were expecting something on January 7th and didn't receive it, that's expected. Your payment is still scheduled based on your birthday later in the month. There's one more calendar detail that's very important for SSI recipients. February 1st, 2026 falls on a Sunday. Because of that, the February SSI payment will be sent early on Friday, January 30th. That means some SSI recipients will see two deposits in January, one that covered January, paid at the end of December, and one that covers February, paid at the end of January. This can easily cause confusion if you're not expecting it. It's not extra money, it's simply how the calendar works. If you rely on SSI, it's a good idea to note this on your calendar so you don't accidentally spend February's money too early. When payments actually show up, most people who use direct deposit will see their Social Security or SSI payments arrive overnight or early in the morning on their scheduled date, depending on their bank. Direct express payments usually load on the same day, although the exact timing can vary. If your payment doesn't arrive first thing in the morning, Social Security generally recommends allowing a few business days before contacting them. Banking delays can still happen, especially around holidays and weekends. Now let's talk about the biggest change tied to January 2026, the cost of living adjustment, also known as COLA. This is the month when most people finally see it reflected in their checks. For 2026, the COLA is 2.8%. For the average retired worker, that works out to roughly $50 to $60 more per month, depending on your individual benefit amount. Nearly 71 million Social Security beneficiaries are seeing this increase starting with their January payment. About 7.5 million SSI recipients already saw it with that early payment at the end of December. One important thing to understand is that you do not have to already be receiving benefits to get this increase. The COLA is built directly into the Social Security benefit formula. That means even people who claim Social Security later in 2026, or even in future years, will still receive the 2.8% increase because it's already part of the calculation. Why some people don't feel the increase. Now here's where reality sets in for many people. Even though benefits went up, a lot of recipients are saying, "It doesn't feel like my check increased much at all." There's a reason for that, and it has to do with Medicare. Medicare Part B premiums increased again for 2026. For most people, those premiums are deducted directly from their Social Security check before the money ever reaches your bank account. So while your gross benefit increased, your net deposit may not feel dramatically higher once Medicare deductions are taken out. There's also something called the hold harmless rule, which protects many beneficiaries from seeing their Social Security checks reduced due to Medicare premium increases. But this protection does not apply to everyone. New enrollees and some higher income beneficiaries are not covered, which is why two people can receive the same COLA percentage and still have very different experiences in January. Now that we've covered payment dates, early deposits, and the cost of living adjustment, let's move into the changes that affect how much money actually stays in your pocket and what January 2026 tells us about the months ahead. Because for many people, Social Security isn't just about what's paid, it's about what's left after deductions, rules, and limits are applied. So let's talk about Medicare, retirement rules, work limits, disability updates, taxes, and some important changes that are quietly reshaping the system. Medicare costs and why your check feels smaller. One of the biggest reasons many people don't feel the full impact of the 2026 COLA is Medicare. For 2026, Medicare Part B premiums increased again. For most beneficiaries, the standard monthly Part B premium rose noticeably compared to last year. The annual Part B deductible also increased. For most people, these costs are automatically deducted from their Social Security check before the money reaches their bank account. That means the increase you see on paper isn't always the increase you feel in real life. This is especially frustrating for people on fixed incomes. Groceries, utilities, rent, insurance, and prescription costs haven't exactly cooled off, even if inflation numbers look calmer than before. There is a protection called the hold harmless rule, which prevents many beneficiaries from seeing their Social Security check reduced due to Medicare premium increases. But that protection does not apply to everyone. If you're a new Medicare enrollee, or if you fall into certain higher income categories, that protection may not apply to you. That's why two people can receive the same 2.8% COLA and still see very different net deposits in January. Why COLA still feels like it's not enough. This is where a larger conversation starts. Many beneficiaries say the cost of living adjustment doesn't truly reflect real-world expenses, especially for seniors. Healthcare, housing, insurance, and food often rise faster than the inflation measures used to calculate COLA. At the same time, economists and policymakers warn that higher COLAs put more strain on Social Security's long-term finances. That tension between affordability for retirees today and sustainability for the system tomorrow is part of an ongoing debate that isn't going away anytime soon. Full retirement age changes you should not ignore. January 2026 also highlights some important retirement age rules that are easy to overlook. If you were born in 1959, your full retirement age is 66 and 10 months. That means sometime in 2026, depending on your birth month, you'll officially reach full retirement age. For anyone born in 1960 or later, full retirement age is 67. This matters because when you claim Social Security has a permanent impact on your monthly benefit. Claiming at 62 can reduce your benefit by up to 30%. Claiming at full retirement age gives you 100% of your earned benefit. Delaying beyond full retirement age earns delayed retirement credits of about 8% per year, up to age 70. These aren't temporary differences. They last for the rest of your life. January is a good time to double-check where you are on that timeline, especially if you're approaching a decision year. Work rules have changed in 2026. If you're working while receiving Social Security, pay close attention here. In 2026, if you are under full retirement age for the entire year, you can earn up to $24,280 before Social Security withholds benefits. If you reach full retirement age during 2026, a higher limit applies for the months before you reach full retirement age, $65,160. Once you reach full retirement age, there is no earnings limit at all. You can earn as much as you want without Social Security reducing your benefits. These rules are especially important for people who are easing into retirement or supplementing their income with part-time work. There's also an important update for people receiving Social Security disability benefits. In 2026, the substantial gainful activity limit increased to $1,290 per month. This means disabled beneficiaries can earn more from work without automatically losing eligibility. For some people, this provides additional flexibility and independence. However, disability rules are still strict, and income reporting remains critical. If you're working while receiving disability benefits, it's important to stay within the guidelines and report income accurately. Taxes are another piece of the puzzle that often gets overlooked. For 2026, the maximum earnings subject to Social Security payroll tax increased. The amount of income needed to earn one Social Security work credit increased. You can still earn up to 4 credits per year. There's also a new federal tax deduction for Americans age 65 and older that applies to the 2025 tax year. This deduction is worth up to $6,000 per eligible individual. Married couples where both spouses qualify can claim up to $12,000. This deduction is currently temporary and is set to run through 2028. Its goal is to reduce how much Social Security income is taxed for many middle-income seniors. If you haven't reviewed your tax situation yet, this is something worth discussing with a tax professional or reviewing carefully before filing. There's also good news for people affected by older benefit reductions. The Social Security Fairness Act is being implemented, ending the windfall elimination provision and the government pension offset. Many teachers, firefighters, police officers, and other public workers are already seeing adjusted payments. Some are even receiving retroactive amounts. For families impacted by these rules in the past, this change has made a meaningful difference. While payments continue to go out on time for most people, concerns remain. Overpayment recovery can still reduce monthly checks, even when overpayments were not caused by fraud. Identity verification rules have become stricter. Staffing challenges and digital-only systems have made it harder for some people, especially seniors, to get help when they need it. Fraud prevention is important, but so is access. Finding the right balance remains a work in progress. That's also why it's important to slow down if someone contacts you claiming to be from Social Security. Real representatives will not threaten you, demand immediate payment, or pressure you into sharing personal information. You may see headlines or social media posts about possible tariff rebate checks, stimulus-style payments, or $2,000 deposits. As of now, those remain proposals, not guaranteed payments. They should not be relied on when planning your monthly budget. If anything becomes official, it will be widely announced through legitimate channels. As we settle into January and look ahead, keep your payment dates written down. If you receive SSI and see payments close together, remember one is for the following month. Double-check your bank and contact information when you can be cautious with calls, emails, or messages claiming to be from Social Security. Social Security is still doing what it was designed to do, sending payments to millions of people every month. But how far those dollars stretch, how easy it is to get help, and how secure the system feels are all shaping confidence right now. If you're feeling cautiously hopeful, still worried, or somewhere in between, that's completely understandable. Many people are navigating the same questions you are, and your voice matters. If these updates help you stay informed, consider liking the video so more people can find it. Make sure you're subscribed so you don't miss future updates, because more changes are coming, and I'll be right here helping you make sense of them. Thank you for spending a little time with me today. Take care of yourself, and I'll see you again soon.